for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have plenty on our plate today, so let's get started by taking a look at the day's highlights. More people here in Korea are going online to get a head start on their gift shopping for the Lunar New Year holiday, or Seol, which falls on February 8th this year. The use of mobile gift cards has surged rapidly over the years, and so have the complaints about their terms of use, as some $22 million worth of money has gone unclaimed. But first, Korea's science and culture ministries are focusing their plans for this year on realizing President Park Geun-hye's vision for the creative economy and cultural convergence. And related government bodies are laying out their plans in a briefing for the president today. Our Kim Ji-yeon starts us off.
6 government offices, including the Ministry of Science, ICT, and Future Planning, outlined their policies for the year in a briefing to President Park Geun-hye on Monday. Their focus will be on boosting the government's growth initiatives through its vision for achieving the creative economy and cultural convergence. The ministries pledged to work toward creating a mutually beneficial corporate environment among the country's big conglomerates, startups, and small and medium-sized companies by utilizing a network of 17 creative economy centers dedicated to spearheading regional innovation and entrepreneurship.
We plan to make employment zones in the Centers for Creative Economy and Innovation by June and help build infrastructure for digital cultural content through creative economy valleys in Seoul's metropolitan districts of Sangam and Pangyo, which are expected to become Asia's largest startup and cultural hubs.
The ministries also hope to inject a combined $65 billion into nurturing core growth industries such as fintech, short for financial technology. The Centers for Creative Economy and Innovation were built across the country to offer a wide range of practical support to IT startups to increase their investments, expand their client base, and provide opportunities for overseas expansion. Aside from that, the Culture and Tourism Ministry plans to dispatch 1,000 artists to 300 companies to help nourish innovative thinking and create cultural platforms. It also hopes to lift the number of inbound tourists to 20 million by creating leisure and entertainment complexes equipped with shopping and casino facilities. The Health Ministry says it will work toward easing regulations in the biohealth sector and support the development of telemedicine systems in rural areas. The Korea Communications Commission says it will seek to ease regulations to allow ground wave channels to broadcast in ultra-high definition, in addition to increasing the number of startups using location-based services. Kim Ji-yeon, Business Daily.
Turning over to the realm of trade now, chief negotiators from Korea, Japan, and China have kicked off a round of high-level free trade agreement talks in Tokyo, Japan. The 2-day negotiation comes after last month's working-level talks in Hakone, Japan, and will follow up on issues discussed there, namely the scope of tariff elimination and market liberalization. The 3 countries have pledged to reach a far-reaching comprehensive FTA that doesn't stop at issues related to goods and services, but is inclusive of those concerning investment, rules of origin, and intellectual property rights, among others. The Korean government said it will immediately lift restrictions on bilateral trade and investment with Iran after international nuclear-related sanctions on Tehran were lifted on Saturday local time. The Ministry of Trade, Industry, and Energy announced on Sunday that it has scrapped limitations on bilateral trade of almost all goods, including petrochemical products, cars, and ships. Trade of strategic materials related to weapons development still requires separate permission from the government. The ministry also added that construction and shipbuilding firms will be able to establish large-scale deals with the oil-rich nation again, as Iran seeks to expand investment in infrastructure and rebuild its battered economy. And after those sanctions on Iran were lifted, global oil prices plunged more than 3% to below $28 a barrel. Asian markets opened sharply lower on Monday, with Brent for March settlement touching $27.88 a barrel. Now, this is nearly 3.7% below the price on the London-based ICE Futures Europe exchange, which closed at $28.94 a barrel on Friday. This is Brent's lowest settlement level since February 2004. U.S. benchmark WTI for February delivery closed at $29.42 on the New York Mercantile Exchange on Friday. Iran's return to the oil market amid a global glut is named as one of the factors contributing to a continued decline in prices. And for more on last week and this week's stock market action, we have economics reporter Choi Jin-seok from SBS CNBC joining us on the phone today. Hello, Jin-seok.
Thanks for having me, June.
All right, let's get started by looking at the Korean stock market. Tell us about Friday's close and its overall performance last week.
Yes, the Kospi closed sharply lower on Friday, ending below the 1880 level for the first time since early September. The Kospi fell by 0.7% to a close below the 680 level as well. The Korean equity market began the session with modest gains, helped mostly by positive momentum from the U.S. stock market. But both indices turned south as the Shanghai market expanded its losses to more than 3%. On a weekly basis, the Kospi fell by 2%, marking its third consecutive weekly decline. Continued worries about China's economic slowdown, falling oil prices, and weak economic data from a number of countries all dragged down global equity markets last week. The U.S. stock market fell by another 2%, marking its worst New Year start ever, with an 8% decline in the S&P 500 index within the first 10 sessions of the year.
All right, then. How did the Korean stock market close on the first day of this week?
There was still downward pressure in the country's stock market. The Kospi opened with a 1.2% decline to trade at the mid-1850 level, but the index has shed most of its losses in late trading hours, mostly helped by the so-called buying in a dip mentality. At close, the index ended mostly flat, falling by 0.02%. Foreign investors were still the net seller on the market, dumping more than 340 billion or 280 million US dollars worth of stocks, while both individual and institutional investors bought shares.
All right. Well, one of the major headlines has been the UN and EU lifting economic sanctions on Iran. What kind of implications will this have for the global economy and financial markets around the world?
Yes, the Iranian economy is expected to enjoy a huge windfall almost immediately. According to BBC, the lifting of energy sanctions means Iran could increase its revenue from oil exports by $10 billion US dollars by next year, given the current price levels. Iran's central bank says lifting banking sanctions will allow $30 billion US dollars of foreign reserves currently frozen in accounts around the world to be brought back. The IMF estimates that with sanctions gone, Iran could boost its GDP growth to around 5% in 2016 to 2017 from the current near zero level.
But Jin-seok, as we've seen in the markets, there's a lot of concern about its added oil supply.
That's right. The Iranian government says it will hike exports by 500,000 barrels a day within a week after sanctions are lifted, and increase total exports to around 2.5 million barrels within the next year. According to Bloomberg, oil prices have already fallen more than 20% this year. As a result, about 10% of the global equity market's market cap has been wiped out. When it comes to the impact on the Korean economy, experts forecast that Korea's exports to Iran will increase from $3.7 billion US dollars last year to more than $6 billion. And construction companies are seen as the biggest beneficiaries because Tehran has announced it will unleash a lot of infrastructure projects in the country.
And of course, China is another unknown these days and expected to do a data dump this week. So tell us more about what else to look out for the week.
Right. China's Q4 GDP growth figures will come out tomorrow morning. Reuters estimates the country's economy grew by 6.8% year-on-year. Chinese Premier Li Keqiang said over the weekend that China's economy grew nearly 7% last year, reiterating Beijing's acknowledgement that the country has now ended its era of above 7% economic growth. The U.S.'s Q4 earnings season will continue this week, too. Morgan Stanley and Bank of America on Tuesday, Goldman Sachs on Wednesday local time will report their quarterly results. Netflix, we saw a huge share price rally over 140% last year, will disclose its earnings on Tuesday as well. Another note on the U.S. front is that stock market will be closed on Monday local time due to Martin Luther King's Day. This has been Choi Jin-seok from SBS CNBC.
Korea's LG Display was the top supplier of TV panels last year, thanks to increased sales in the Chinese market. According to industry tracker Witsview, LG sold 55.3 million TV panels last year, up 6.4% from the previous year. Samsung Display, which topped the market in 2014, fell 2 notches, with its shipments down 8% on year, while Taiwan-based Innolux moved up to rank second. Witsview attributed LG Display's success to reducing its reliance on affiliate LG Electronics and instead focusing on the Chinese market. The global TV panel market grew nearly 9% on year in 2015. We're now just weeks away to one of the 2 biggest holidays here in Korea, Seol, better known as the Lunar New Year. Giving gifts is an important part of this holiday, but it's a tradition that has changed over the years. And our Eunice Kim shows us what we can expect this year.
In the years following the end of the Korean War, Seol gifts were simple food items or daily necessities like rice and toothpaste, reflecting a country struggling to make ends meet. As the economy picked up and began showing significant growth, so did the cost of Seol gifts, with gift certificates and regional specialties appearing in the 90s. This year, amid a slowing economy and a stagnant outlook, Koreans are already searching for affordable options to gift to their nearest and dearest.
I'm thinking of apples or Asian pears this year, which are both healthy and affordable.
I'll pick up snacks that Grandma enjoys within an affordable price range.
Taking a look at pre-orders taken at one local department store chain since last month, sales of food items like Korean premium beef, hanwoo, and fruits took a noticeable jump. In particular, retailers are keeping their eyes on hanwoo and gulbi, dried yellow corvina, as their supplies are falling this year.
Prices on items like hanwoo and gulbi have jumped, but by securing pre-orders, we've tried to minimize the price gap. We've also prepared various gift sets as alternatives.
Notable in this year's gift-giving trend is that more people are ordering their presents ahead of time, and more are doing so online.
Products tend to be offered at a cheaper price online, so I'll look around in person, then buy it online.
As more people shun in-store gift purchasing, for pre-orders and online buys, this year's delivery competition could be fiercer than ever. Eunice Kim, Business Daily.
A lot of people in Korea now prefer to use mobile gift cards instead of carrying around printed vouchers. Now, while this may have resulted in added convenience, consumers say the smart option also comes with greater limitations. Our Lee Ju-young tells us more.
Korea's mobile voucher market showed explosive growth last year, reaching $390 million in size, up about 150-fold from 7 years ago. But what has also swelled is the number of consumer complaints.
I'm not really sure how to get a refund, and it seems complicated. Sometimes I end up using goods I don't need.
The expiry date is too short, so a lot of times I don't get to use them.
Even while the country's Fair Trade Commission updated its guidelines for mobile gift cards in April last year, experts point out the many existing loopholes underlining the $22 million worth of money left unclaimed.
It can only be viewed as firms trying to make more profit out of coupons that have expired.
So the Fair Trade Commission released updated guidelines this month, rectifying policies deemed unfair. Under these revisions, firms are no longer able to arbitrarily decide on their own gift card policies. Instead, the expiry date of gift cards that can be exchanged for specific products has been extended to 3 months, and vouchers that come with a set of monetary value remain valid for up to a year. Both types can retain their validity of a maximum of 5 years upon extension. The issuers are also obligated to notify consumers at least 3 times before the deadline, along with methods of extension. The Fair Trade Commission says it hopes these new terms will establish greater fairness when using mobile vouchers, all the while protecting consumers and improving unproductive transaction practices. Lee Ju-young, Business Daily.
And that does it for now. But we'll be back tomorrow at the same time, same place with more business news that matters to you. So don't forget to tune in then. Thanks for watching and goodbye for now.